All right, let's start streaming here, guys. Waiting on YouTube. Just wanted you to know that this is going to be, we are live. All right, guys. The audio here is not that great. I hope you can hear me. Let me fix this real quick. The audio here. All right, so, all right, hope you guys can hear me. If you can, I guess I'll re-record tomorrow or sometime. You're at Wall Street sizing up. I'm glad you're here. This is the stocks to watch. We do it every week. We used to stream, and sometimes we still stream. Do a lot more on TikTok. We've just moved the subs, or just started to move the subs over to the Telegram group. We were doing SMS, but I thought this was a very good time since it's a 3-day weekend. And as of Tuesday, we're cutting off all SMS text. So with the market closed today on Good Friday, I'm recording this for 2 stocks that have come in after hours on Thursday. I'm sure there'll be some more today as well, and we'll probably cover them on Monday. Also got some open insider information as well. And with that said, guys, we're going to get right to it. First stock up is, and hopefully my cam is working, it is, first stock is going to be AAVE. Now, AAVE is a very interesting stock, okay? It's AAVE Technologies. This was sized up on by, let me get the name right here, guys. It was sized up on by Celebria Capital, and that is a Hong Kong hedge fund. That I know. And they sized up with about 1.5 million shares on 3/31. All right, they're catching this uptrend. You can kind of see the little bump up. The most that they're up is 9% at this point. Right, again, 1.5 million shares. They IPO'd in March, I believe March 12th. And if I'm correct, let me look at their, yeah, so this was a SPAC. So they IPO'd through a SPAC at about $10, right? I want to go back to this. I would say this is well, let me tell you what they do. They make sensors for cars and drones. They compete with LiDAR, which was, I believe that is on Tesla. They're starting to get some contracts in, some very high growth. They're expected to have 74% revenue growth this year. They have you can see it's trading about $12.46 right now. After hours, it was up a little more. I've got a price target of $20 on this, so that there's a good risk reward ratio here. But I had one tool, Simply Wall Street, is saying it's worth $80. So no, that was that outlier. Now the key to this one is the people that hold it's not really Wall Street, but it's 50% insiders hold this. Clearly that's because it just went into it was in a SPAC and now it's not. It's been about 2 weeks, right? I think it came out of the they switched it over from the SPAC to the actual company, I believe the 12th, right? So understand that. Here's the thing. If I'm looking at the technicals, let me get to the technicals here, right? It's gone through a lot of trash, and it's done typically what a SPAC does. It does this up and then does it down. So typically after 90 days, SPACs typically do not do well, right? But the first 90 days, really the first month, 2 months, they'll do spectacular. But here's what I'm seeing here, right? You're not going to see my chart, but I'm on TradingView here. So it's got kind of a double bottom. It's already formed, like you can see it right here. It's bounced off of that. It bounced off the day of that the hedge fund got in. I like this stock. 1, I like what they do. 2, I like how aggressive the management is. 3, I like the high growth. And 4, its price target is $20, which it's already hit, right? So it's not, and you've got a double bottom. I want to say kind of, but I think it is, from what I can tell. And just its short history trading as a public company, it does look like a double bottom to me, which means it's very bullish, and clearly it can get to $20 very easily. Can't reach the 80. I don't know. That's more of a long-term play. To me, this is short-term, but if you want to stay in this long-term, you're going to have some hard hands, right? So, with that said, that's AEVA. Price target of $20. Next up is Kindred Biosciences. All right, now this stock KIN. Again, we're gonna bet the jockey here more than the horse. This was sized up on by Steve Cohen at 0.72, right? He also owns the Mets, by the way, and they just signed a player for $341 million over 10 years. Crazy. So this is nothing new. He sized up at 3.8 million, close to 4 million shares, right? So he's put about $20 million in this thing, which is nothing, because I believe it's his hedge fund side. He's got several funds that do different things, but the hedge fund side is about 15 to 16 billion. Could be more now. So he sized up, and the thing about this is that he did get so when he sized up, it must be nice to be a hedge fund that everybody follows, and the moment he sizes up, he gets a 9% up. So he could absolutely be out of this trade, because what we've got him at is he's probably at least up 9 to 10, maybe even 11%. So he could have got, now that was after hours though, but he could have got the bump and he could have got out, right? They have liquidity like we do not. This is a fairly liquid stock. The average volume is about 500K. It's not great, but enough for him to get out. But he filed literally a day after, so to me, he may be out of the stock. The thing about this stock, I'm going to tell you a little bit about it. This is Kindred Biosciences, right? It's an animal drug manufacturer, and that's key, right? The revenue is expected to grow 44% this year, right? Here's the thing, and if Steve Cohen and 0.72 are still in, this is probably why. There is a lot of acquisition talk and partnership talk with this stock, and that comes from the president, right? Now, again, the risk reward here is fairly good. It's got a $9 price target on it. It's got 100% buy, and it's got, I believe, it was downgraded on March 17th, but I've seen some outperforms as well. That's just one bank. 66% of it is owned by Wall Street. So this is clearly, I'm betting, and it just bounced off massive support here, right? And it's going up. Clearly, I'm betting the jockey, not the horse here. And if he is so my strategy here would be this. If you come in on Monday and this stock, it's got to break, really, it's got to break above 505, 508, 509. If it breaks above that, it's probably going to run a little bit, right? If it comes in and goes down, it might be one that you want to watch. Again, it's got massive support at just under 450. So that's how I would play this stock. That's how I am going to play this stock. I'm a Steve Cohen fan, not because I'm a Steve Cohen fan, but I'm a fan of, he typically gets in, makes money, and he's more of a midterm guy. He's not long term, he's not short term, he's more of a midterm guy. So just, yeah, that's kind of why I actually like him. All right. So now to Open Insider, I wanted to show you some stocks that the subs may have already seen. OpenInsider.com, we get a lot of information from this. So we like cluster buys, right? And I've done TikTok. In fact, find us on TikTok at stocktrade.tips, right? You can find us there. You can find us on Telegram at stocktrade.tips. It's 2 weeks free, and then it will take your credit card. The bot will. but you get 2 weeks free, and then I'll get charged. So, all right. So on the insider buys, some of these we actually really did like. We have called that AAVE before. That's AAVE Biosciences. We've done them before. Another one we really liked was BW. And the funny thing about this one is, I looked at a Goldman Sachs report literally after we called it this week, and they had BW as one of their top 10 stocks this year. Maybe it was, yeah, definitely this year. So I thought that was very interesting as well. We did like the Designer Brands group; they were very good. And I don't think we sent this out, but Selective Biosciences, we like them as well. So we did send those out to the subs. So we do use Open Insider quite a bit. There are several tools that we use. Simply Wall Street. We use Pro Tips, Insider, Fintel, HedgeMind. We use them all to bring you everything. And let me just tell you, it's been extremely slow. So since the growth stocks have kind of dropped off, and now we're kind of moving into more value stocks, it's definitely dropped off a lot. And so if there's something to be had by the hedge funds and investment funds, it's typically a quick pump and they're out, and then the filing. So there was probably, I don't know, out of the filings, probably 40%, 50% of those were just quick pumps and they're getting out. And not to say that Ken is not that, but I don't believe that it is. I think it's more of a midterm investment for 0.72. So with that said, guys, thank you very much for watching me try to keep this short. As we say all the time, watch your six, you go hard in the paint. Have a great Good Friday. Have a great Easter weekend. And we will see you on the Telegram on Monday and Tuesday. And we're going to get rolling. Appreciate you guys.